Hello everyone, welcome back to another video. Before we start, disclaimer as always, I'm not a SEBI registered research analyst or investment advisor. Anything that I discuss or talk about in this video is not supposed to be investment advice. This is intended primarily from an education standpoint. With that context set, let's just dive right into the video where I'll be talking about gold and coming over directly to the charts. I want to talk about where we are, when it comes to gold and why this is an extremely important or key level to track or understand. This is the weekly time frame chart, and on your screen, you will see how gold has given a phenomenal rally, starting end of 2023. Post that, there were multiple bases that were tradable and investable, right, which formed during this stage two. And now we're essentially approaching the 30-week simple moving average, which essentially is a great litmus test to understand a transition from stage 2 to 3 and 4. Stage 2 is, the markup phase of any asset class or commodity. And if you watched my previous video, you will relate to this better. But for those of you who haven't, I'm just going to explain this briefly. The orange line on your screen is the 30-week simple moving average. Why it is extremely important is, the details of which are mentioned in Stan Weinstein's book. I will link that in the description again. And, this is a key level. It is an extremely important technical level, which all institutions, family offices, pension funds, mutual funds, the smart money tracks very closely, right? So this is an area of heightened volatility. This is an area which decides for future moves, right? The last time we corrected, from the top when it comes to gold as an asset class, we tested the 30-week simple moving average, post which we jumped back up, right? I will switch to the daily time frame chart to put things in perspective. But from the peak of about 5600 or 56 odd hundred US dollars, we looked at levels of almost 4100, and as soon as these levels were hit, the gold retested and started moving or inching up. The same is visible again, right? We have tested the 30-week simple moving average on the 29th of April, which is just 2 days ago, and gold has started inching up again, right? There have been two sessions wherein we have closed above the 30-week moving average. Now, if you're a long-term investor, if you wish to hold gold as a core allocation to your portfolio, then I would urge you guys to continue your SIPs in gold. In a staggered manner, you can come into this asset class and keep investing. Should you wish to take a little bit of extra risk, I would strongly suggest that you wait for at least 3 to 4 sessions, to build directional conviction on the upside and deploy a substantial piece here so that you can take advantage of this rally which can come ahead. If you're a tactical investor like me, if you're a positional and stock trader, and you also have access to commodities as an asset class, then you can certainly take a long bet on gold as an asset class, should it continue to rise from this level, right? This is a key level from which we have seen trends break or continue, right? So there are two things that you can do as a trader or a positional, as a positional trader or a swing trader. You can essentially, because since the long-term story in gold is intact, I wouldn't recommend to go short. But if you're a tactical, allocator, then you can certainly short gold should it close decisively below the 30-week simple moving average for greater than 3 to 4 sessions, with strong volumes. And should you wish to trade on the long side, because the long-term story of gold is still intact, and I'm not going to discuss that in detail in this particular video, but it's pretty evident, right? It's widely spoken about in the internet. All the central banks across the globe are buying. There is, great demand from private wealth as well now, and we're seeing gold become a tactical, not just a tactical, but a core allocation, when it comes to US private wealth. So there'll be great inflows in gold in the coming times. That is evident. That should drive gold prices up. And as we move away from dollar as a global currency, central banks need another safe asset to park their reserves in. So gold provides that stability, gold provides that safety and insurance, which is why central banks keep buying it. I'm not going to go into the nitty-gritties and the macros. We're here to, look at charts. We're here to look at actionable insights on gold and how to trade or invest in gold right now. So I'm just going to neatly summarize this. If you're a long-term investor, continue your SIPs. Do not, fiddle with your allocations. Should you wish to take a little bit of additional risk, and that of course comes with a little bit of extra reward should it be conducive, then you can certainly deploy, a significant amount at these lower levels should it continue to rise for another 3 to 4 sessions. That will give you advantage of entering at lower levels and averaging down, which I typically don't recommend. But gold as an asset class, like I said, the long-term story remains intact. So buying at any level is not a very bad idea because there is a limited supply of gold in the world. And if you look at the clear principles of macroeconomics, everything works on demand and supply. Should demand of gold supersede the supply, gold prices will certainly move back up. So long-term investors stay intact. Should you wish to take additional risk, deploy some more capital. If you're a trader, you can trade it both on the upside and the downside. For the upside move, you would want to wait, for at least 2 to 3 more sessions to get some confirmation, and then take your long positions. And then if it, decisively closes below the 30-week simple moving average, then it's an open tap. Gold can go much lower, right? Because this is a key long-term trend indicator or litmus test. So take a short position should it close decisively for at least 3 to 4 sessions below the 30-week moving average with high volumes, and try to keep the context of gold in US dollar terms because that's the currency in which it is traded the most. I know the INR chart for gold on MCX is slightly different. It is not approaching the 30-week simple moving average, but India will follow the global trend. It will not create a trend of its own. Of course, there'll be slight divergence because of import duties and other choke blocks from a taxation point of view. But yeah, you want to trade or rather track gold in US dollars and make your trades or take your trades accordingly. If you're taking trades in the commodities segment through derivatives, sure, certainly look at the charts, for those specific contracts, and then take a decision. But this is a generic view of where gold is headed and how you can position yourself during these times. With that being said, I own or have a significant allocation to gold as part of my core portfolio, which I purchased at a much lower level than now. So I am still sitting in comfortable profits. I did book a large part of my gold trade allocation during the peak period, right? Around 5,300 levels, somewhere here. Post which we saw a major reversal. And my core allocation, which intend to hold for a long-term period, is still intact. I wish to double down should it move upwards. I am not personally taking a short position, but should you wish to do that, you can certainly do it. Do manage your risk well because the long-term story in gold is intact, like I said. And yeah, trade with a proper setup. Hope and emotions is never a strategy, right? You cannot hope for gold to move up. You only have to follow the price, you have to follow the volumes and understand where it is today. That is pretty much it from this video. I will see you guys in the next one. This was a short one, but it should give you some clarity on how you can look at gold as an asset class today. Thank you very much for watching. Do leave a comment down below. And yeah, I will share my personal trade setup with you over a DM if you comment down as well. Thank you very much. I will see you guys in the next one. Until then, take care. Bye bye.